Okay, at this point it's worth recapping. So the first thing to do is to add together the value of personal assets. This is on your zakatable date and not a fluctuating value between zakatable dates. So add personal assets, the value thereof, gold, silver and cash. Add the full value of business assets if the intention is to resell those immediately. Add zakatable value, not full value of business assets if intention is not to resell immediately, for example, properties, shares, pensions, business stock and cash. Add any debts owed to you by others which are immediately claimable. Subtract any debts owed to others by yourself which you intend to pay immediately. And the figure which is left will be subject to 2.5% of zakah only if it is equal or above the nisab. And in the next slide we'll look at the definition of the nisab. So let's look at the definition of nisab. The nisab is the amount of wealth an individual owns before they are considered to be subject to zakah. So broadly people fall into one of two categories: those who are above nisab and who must pay zakah, and those who are below nisab who are the recipients of zakah. The nisab is a value which was set by the Prophet Muhammad, peace be upon him, as 20 mithqal. This is 87.48 grams of gold or 612.36 grams of silver, and these are values which are fixed, but the values thereof will fluctuate from time to time. If someone possesses only gold, which is unlikely, then the nisab level for gold must be used. If, however, as is more common, a mixture of assets are possessed, then the lower silver nisab level must be used. Current market data suggests that the nisab level is approximately £1,781.96 in gold, and for silver is £177.58. Assuming a person's wealth is equal to or exceeds the nisab level, then the zakah is payable on it at 2.5%. So once the zakah has been calculated, when must it actually be paid? Well, zakah is only paid when you've continuously been at or above the nisab level for 12 lunar months. If a person cannot remember the date upon which he or she becomes sahibun nisab, i.e. the owner of wealth above which zakah is payable, then one should make the best estimate, and then if an estimate cannot be made, then a date should be selected which is then stuck to each lunar year. The selected date does not have to be in Ramadan, although most people do tend to choose Ramadan because it is a virtuous time to give charity. Zakah should be physically distributed as soon as possible after the zakah date, at least within one lunar year of the calculation. Missed zakah should be calculated to the best of one's ability and paid. So no doubt there's quite a lot of information to take in. So the best thing to do is look through a case study which will then highlight how these particular rules are then addressed to an individual who has assets which are considered of the current age. In our example, Aisha, on her zakah anniversary date, which is the 10th of Ramadan, takes account of her finances as follows. So the first point is, it's a snapshot at that point in time on that date. So she has a car, clothing and furniture which amounts to £15,000, personal gold and jewellery of £2,000, owns 50% of her home which is worth £275,000, and it has a diminishing musharaka finance arrangement of £100,000. She owns half of another property which is rented out. The value of the total property is about £180,000. Aisha has an optician's business which has a stock of glasses and contact lenses worth £20,000, cash in a business which totals £15,000, and in her personal account which is £10,000. She owns some shares in BP which are for resale at £2,000. She has lent £3,000 to her friend. She has a personal pension which she has chosen to invest in a Sharia compliant cash account, the market value of which is £30,000. She owes £5,000 to the suppliers of glasses and has 3 years worth of instalments outstanding on furniture purchase, total debt of which is £6,000. If we look at the following table, we can see which of these assets is subject to zakah and which isn't in general. Well, only personal possessions are not going to be subject to zakah, but all gold is, whether or not for personal use. The main residence is not going to be zakatable, and the investment property is not going to be zakatable either. The stock in the business is zakatable, the cash is, the shares are, money owed to Aisha is zakatable, the pension is zakatable, the money owed to the supplier is deductible for zakah, and when we look at the debt on furniture, although it's a 3-year debt, we can take into consideration 12 months of future repayments as deductible for zakah purposes. The points to note here are, as Aisha had a choice in where she invested her pension and it is held totally in cash, then it is subject to zakah. As the money is owed to Aisha immediately, it is fully subject to zakah. The shares are there to be resold immediately, and hence their full value is considered zakatable. So although these are general points, there are specific issues that need to be considered when assessing them more accurately. The following table actually provides a calculation. So if we look at the values, we can see that the net amount which is subject to zakah is £75,000, and at 2.5%, that is 1,875. So that is the amount of zakah which is due on the date of calculation and can be paid up to 1 year afterwards, but it is highly encouraged for it to be paid immediately. So moving forwards, there are tax efficient ways in order to give a zakah. For individuals, the gift aid scheme allows a UK registered charity to reclaim the basic rate tax paid by the taxpayer. Hence, an £80 donation will allow the charity to reclaim £20 from the taxman. The £20 received by the taxman cannot be offset against the zakah liability. Higher rate taxpayers can claim an additional personal rebate of 20% via a tax return. So that is to say, it is better to donate zakah to a charitable institution who can effectively administer those funds, because the institution will be able to receive a tax rebate for contributions made by individuals. For companies, donations are considered tax deductible against their profits, so the actual contribution from a company is made gross. Where possible, UK companies can set up their own charitable trusts and hence can make contributions directly to their charitable trusts and reduce their immediate liability to taxation in the process. So in summary, it is clear from the presentation that zakah can come across as a complicated issue, and in some instances and in relation to some assets can be involved. But the purpose of today's presentation has really been to demystify the subject and to provide people with a platform from which to move forwards. Zakah is the third pillar of Islam and is compulsory if you are above the nisab level. Zakah is a purification of one's wealth and is an absolute right of the poor over the rich. Failure to pay zakah has consequences in this life and in the next. Those whose total wealth, excluding basic necessities and debt, is below the nisab level are those who are able to receive zakah. The zakah should be calculated promptly on the annual zakah date and paid as soon as possible. The three main assets that are subject to zakah, which are personal, are gold, silver and cash, and in addition to that we have business assets, which include the value whole or part of shares, pensions, child trust funds, home purchase plans and properties. Debts receivable from others are added to the zakah total. Debts payable to others are subtracted, and zakah is payable on 2.5% of the net assets. And finally, we looked at the issue of paying zakah in a tax efficient way in order to take advantage of the gift aid scheme, which is supported here in the UK. That brings us to the end of the presentation. If you would like to understand the subject in greater detail, please download the guide Understanding and Calculating the Zakah from the First Ethical Charitable Trust website. That's www.firsethical.com. Fatwa and edicts
which have been issued in relation to points raised in the presentation can be found at the Al-Qalam website, which is www.alqalam, that's alqalam.org.uk.